and good afternoon. My name is Ahmed Sheikh. I serve as the Group CEO of Uma Insurance. Uma Insurance is a Pan-African risk management that is headquartered in Nairobi. With a subsidiary in Somalia, South Sudan, and Uganda, with a plan of going at least 5 other countries by 2030. These companies, majorly we focus on 3 areas. Of course, as a risk management company, we are focused in risk transfer, advisory of insurance and risk management, and also consultancy and risk management as well. So basically, this company was founded in 2019, but it is a company with a vast experience of a century, a collective experience for all its employees. And we are currently giving services of most of African countries. We have got also an international partners globally that protects most of the risk management we are putting into international market. We are very big in aviation industry. We basically provide aviation insurance. We are also very big in international medical, where we provide mostly on international organization, diplomats, and expatriates. We also do largely on, big risks such as construction, oil and gas, and agri insurance, livestock insurance. So basically, that is the introduction that I'm able to give at this point in time. But UMA is a company that is changing the landscape of insurance industry in Africa, and we are actually taking the service closer to every step and everywhere that we're able to take the insurance service and demystify what insurance is. Thank you. And basically, principle of mutual assistance is the cornerstone that fundamentally differentiates Sharia-compliant against conventional insurance. Both its application and also its benefit. So if I may give you a few examples of the differentiation between Sharia-compliant and the conventional insurance system, is one of them the concept of risk transfer and also risk sharing. For conventional insurance, you pay premium at the cost of selling your risk to them. And in Takaful model, or rather Sharia-compliant model, you share the risk. That means it is customers will contribute towards a common pool called tabarru, so that each of them contributing to that pool just to indemnify each other. While the conventional system, they buy your risk at premium. In the model of Takaful, or rather a Sharia-compliant insurance model, the premium is owned by the customers. In Takaful, we call it participants. So that means when we contribute towards the common pool, we are in agreement as the customers to indemnify each other in case of a loss. While the conventional insurance, the moment you put premium into the company, the premium becomes the property of the insurance company. That means in the event of profit, it is a profit for the shareholders. While Takaful model, in the event the collection of the premium is more than the claim settlement and operation cost, the company declares surplus to the customers. So that is one thing that removes the interest or riba from the concept of Sharia model. So that one is they give back in the event there is an excess money into the pool. The other aspect is also the investment ethics. And in Takaful model, the investment is regulated. You can only regulate, you can only invest in the area where it is not prohibited in Sharia law. While the conventional insurance, they can invest in anywhere, alcohols, interest ventures, and all these things. That is also the other aspect that differentiates the Takaful model and Sharia model. The mutual assistance concept is more than transaction in Takaful model. That means you are creating a pool to guarantee each other. You are creating a pool to demystify each other. But while on conventional insurance, it's more of a transaction. You buy the risk at premium, assuming that when a claim happens, you are compensated. So both Takaful and Sharia and conventional insurance have one role here. They demystify at the time of claim. But Takaful give back surplus sharing in case there is an excess of fund into the tabarru account. So that is basically what differentiates both Sharia compliant insurance companies and also the conventional insurance. Thank you.
Fantastic. Thank you so much for that, and thanks for clarifying.
So one, you simplify the language, illustrate the benefits, create, public forums, seminars, so that people understand what Sharia compliant insurance mechanism is. We are in a continent where in East Africa alone, I think there's only one Takaful player. So how are we able to reach 50 million, 40 million Kenyans to know more about the Sharia compliant model? What do we need to do? So if you illustrate the language, simplify the language, create a workshop and really demonstrate the benefit of Sharia compliance system is one option. The other option is this digital world. People tend to be closer to their phones than anything else. Nobody reads magazine, nobody reads anything. People are getting information through their phones. So digitalize your marketing concept, digitalize your approach, or your online customers, so that they understand the value you're putting to the table. And the other aspect that is also very important is create a channels that people are able to understand the kind of businesses you are running. Also to do a comparison on what the other competitors in the market are doing is also very key. The most and the last point, the most important and the last one is give the perfect of seamless service to the customers that are currently in your books. Remember, one certified customer will tell thousands of others about you, and one decertified customer will also tell 2,000, or rather another 1,000, just to tell them how your service is poor. You make sure that you deliver seamless service to the customers that are currently in your books, with the potential of turning that one customer into 3. Thank you. This comes to the same point that I have emphasized earlier. The one benefit that customers get out of the Takaful, despite being religion. Is that the question? Yeah, I think the potential of receiving surplus, that is the one benefit beyond religion. And because the bottom line is, at the end of the day, you bought a risk, or you transfer your risk to an insurance company, and then 12 months or the policy period expires. You assume you haven't got any claim. The only potential benefit is receiving the surplus sharing at the end of the policy period. Muslims community looks or buy the insurance with the guidelines of Sharia law. Non-Muslim buy insurance from Takaful because of transparency and integrity. So the benefit that comes out of both, for both of them, is the potential of receiving the surplus sharing. So how did surplus come? Surplus comes in the event where the collected fund is more than the company's expense, that is operator's expense, and the claim. So if the expense is less than the fund that was contributed to the common pool, then Takaful operator refund the benefit, or rather share the benefit back to the customers. We call it a surplus sharing. So this comes based on how and the modality of Takaful operator.